Typically that's non-correlated to what's happening in the stock market, which is a good thing right now.
Yes.
And you mentioned you borrow against the cash value of that. So, as you probably know, like we're all sophisticated around here, but as you probably know, that's a non-taxable event, right? So you get access to your money to go buy a business or real estate or more equipment or, hire somebody, startup capital, any of that stuff. You borrow against that policy while it continues to generate that whatever 4 or 5% return there, because you're not taking it out of there, you're borrowing against it. And that, I think, is what kind of makes it powerful. It has your money working in multiple ways at once.
100%. Yeah. And it's people understand leverage who are investors. Like they put money in their house and all of a sudden they can get a line of credit against the equity in their house and they can go do what they want with that line of credit. Right. Mm-hmm. So how does this differ? Well, one, like you said, this is not correlated to the market in any way, shape, or form, real estate or stock market. It is tied to a contractual basis with an insurance company. These insurance companies have been around for over 100 years, have never missed a dividend payment. That's like their surplus, even through the worst recessions, depressions that have all spanned that amount of time. And so these are very solid places to park capital because they do business in a very conservative way. But they also give you access to be able to borrow against that cash value with a loan process from their insurance company. Now, what's different is when I borrow against my line of credit on my equity line on my house, I immediately have to start repayments, right? Either interest-only payments or principal and interest, however it's set up. I have to start making that payment, whether my laundromat is cash flowing day one or not. True? Mm-hmm. It's required. Otherwise, they come take my house. On my life insurance policy, when I borrow a loan against that cash value, because they have a death benefit associated with that policy that far exceeds with a loan that I've just taken, they're actually not going to require me to make structured payments back to them at any amount of time.